Most traders come to the markets believing they need better indicators. They think they need a more sophisticated strategy. They believe the answer lies in finding that one perfect setup that will finally unlock consistent profits. But I want to tell you something that might disturb you at first, and it is this. Your strategy is not your problem. Your indicators are not holding you back. The real barrier between you and consistent profitability is not out there in the market. It is inside you. It is in the way you think. It is in the way you perceive risk. It is in the beliefs you hold about what trading actually is. I have spent decades studying why traders fail, and what I discovered changed everything I thought I knew about success in the markets. The truth is simple but profound. Trading is a mental game. It is a psychological battle. And until you understand how your mind works against you, no strategy on earth will save you. Today, I want to take you on a journey into the hidden world of your own psychology. We are going to explore why you do what you do, why you hesitate when you should act, why you act when you should wait, why you move your stop loss at the worst possible moment, why you cut your winners short and let your losers run. None of this is because you are weak. None of this is because you lack discipline. It is because your brain was not designed for trading. And once you understand that, everything changes. Let me start with a fundamental truth. Your brain evolved over millions of years to keep you alive, not to make you a profitable trader. To keep you alive in a dangerous world where threats were immediate and survival depended on quick reactions. Your ancestors who survived were the ones who avoided pain, who feared loss more than they valued gain, who saw patterns even when patterns did not exist, because seeing a lion in the grass when there was none cost nothing. But missing a real lion cost everything. This is how your brain is wired. To avoid pain, to fear loss, to seek certainty in an uncertain world. And this is precisely why trading is so difficult. Because the market does not care about your evolutionary programming. The market operates on probability. The market is random in the short term. The market will hurt you emotionally before it rewards you financially. And your brain fights this reality every single day. Let me give you an example. Imagine you have a trading system that wins 55% of the time. Over 100 trades, you will win 55 and lose 45. This is a profitable edge. But here is what your brain does. You take your first trade and you lose. Your brain immediately feels pain, not just disappointment. Actual psychological pain. The same neural pathways that fire when you experience physical pain light up when you lose money. So your brain says, stop. This hurts. Avoid this. You take your second trade and you lose again. Now your brain is screaming at you. This system does not work. You are going to lose everything. Stop now. But the system does work. It just works over a series of trades, not on any single trade. Your brain cannot accept this. Your brain wants certainty now. It wants to know that this next trade will be a winner. And because the market cannot give you that certainty, your brain interprets the market as dangerous. This is the first major conflict. Your need for certainty versus the market's inherent uncertainty. And until you resolve this conflict, you will continue to sabotage yourself. There is a concept I want you to understand deeply. Loss aversion. This is the idea that losing $100 hurts approximately twice as much as winning $100 feels good. This is not a theory. This is how your brain actually works. And this creates massive problems in trading. Think about what this means. When you are in a winning trade, the pleasure you feel is moderate. When you are in a losing trade, the pain you feel is intense. So what do most traders do? They cut their winners early to lock in that small pleasure. And they hold their losers, hoping the pain will go away. They cannot bear to take the loss and make it real. As long as the trade is still open, there is hope. As long as there is hope, they do not have to face the pain of being wrong. But the market does not care about your hope. The market will take that small loss and turn it into a catastrophic loss. And then, when you finally exit, the pain is unbearable. So unbearable that you swear you will never let it happen again. And what do you do next? You cut your next winner even earlier, Because you are terrified of watching a profit turn into a loss. This is the cycle. This is why most traders fail. Not because they do not know where to enter, but because they cannot manage the emotional experience of uncertainty. Let me be clear about something. The market owes you nothing. The market does not care that you need this trade to work. The market does not care that you lost on the last 5 trades. The market does not care that you moved your stop loss because you believed in your analysis. Every single trade is independent. Every single trade has a probability of success and a probability of failure, and you cannot control which one it will be. The only thing you can control is whether you follow your rules. But your brain does not want to hear this. Your brain wants control. Your brain wants to be right. And this brings us to the next trap. Why do you hesitate before entering a trade? You see your setup. The conditions are perfect. Your system says enter. But you freeze. Why? Because you are afraid of being wrong. You are afraid that this will be another losing trade. You are afraid of the pain that comes with loss. So you wait. You want more confirmation. You want the market to prove to you that this trade will work before you risk your money. But the market never gives you that proof. And while you wait, the opportunity passes. Then, after the move happens without you, you feel frustrated. You feel angry at yourself. So the next time your setup appears, you jump in without hesitation. You are determined not to miss it again. But this time, you did not wait for all your conditions. You entered on emotion, not on structure. And the trade loses. Now you are confused. When you hesitate, you miss the winners. When you do not hesitate, you catch the losers. What is happening here? You are experiencing the consequences of trying to control the market. You are trying to avoid being wrong. But in trading, being wrong is part of the process. You cannot have winning trades without losing trades. They are two sides of the same coin. The moment you accept that any single trade can go either way, everything changes. The moment you accept that being wrong does not mean you are a bad trader, you become free. Free to follow your system. Free to take every signal. Free to let the probabilities work in your favor over time. But most traders never get there, because they are too attached to being right on this trade, right now. Here is another way your brain betrays you. Confirmation bias. This is your brain's tendency to seek out information that confirms what you already believe and ignore information that contradicts it. Let me show you how this destroys traders. You enter a long position. The market starts to move against you. Your system says exit. Your stop loss is hit. But you do not exit. Why? Because you start looking for reasons why the trade will still work. You switch to a smaller time frame, and you see a bullish pattern forming. You remember a news event that should support your direction. You tell yourself the market is just shaking out weak hands before the real move begins. You find confirmation everywhere because your brain is actively filtering reality to protect your belief. Meanwhile, the market continues to move against you, and the loss grows. This is not a failure of analysis. This is a failure to accept reality. The market is telling you that you are wrong, but you cannot accept it, because accepting it means pain, and your brain will do anything to avoid pain, even if it means creating a story that has no basis in reality. Now let me show you the opposite scenario. You are in a winning trade. The market is moving in your favor, but you start to feel anxious. What if it reverses? What if I give back these profits? So you look for reasons to exit. You see a small candlestick pattern that could indicate a reversal. You notice the volume is decreasing. You remember that you have been burned before by holding too long, and you exit. The market continues in your favor without you. You just cut a winner short because your brain was looking for danger. Do you see the pattern? When you are losing, your brain finds reasons to stay in. When you are winning, your brain finds reasons to get out. This is backwards. This is why most traders lose. They are operating on emotion disguised as analysis. True trading is the opposite. You stay in winners because your system says stay in. You exit losers because your system says exit. The market does not care about your opinion. The market does not care about your analysis once you are in the trade. The only thing that matters is whether you follow your rules or follow your fear. Let me tell you something that might sound strange. Many traders are afraid of success, not consciously, but deep down, there is a conflict. You want to make money, but making money consistently requires you to think in ways that feel uncomfortable. It requires you to detach from outcomes. It requires you to accept losses without emotional reaction. It requires you to trust probability over prediction. And these things go against everything your brain wants to do. So what happens? You sabotage yourself. You have a great system that works. You follow it for a while and you start making money. But then something shifts. You start to doubt. You think, this is too simple. There must be something I am missing. So you tweak the system. You add new rules. You change your time frame. And suddenly, the system stops working. Or you do the opposite. You follow your rules perfectly and you have a great winning streak. But then you feel invincible. You feel like you have finally figured it out. So you increase your position size dramatically. You take trades that do not quite meet your criteria because you are on a roll. And you give back everything you made, plus more. Why does this happen? Because you were not ready for success. Your beliefs about yourself and about trading were not aligned with consistent profitability. Somewhere inside, you believe that trading must be hard. You believe that easy money is not real money. You believe that if you are not stressed and working hard, you are not really trading. These beliefs are invisible, but they control everything you do. And until you change them, you will continue to sabotage yourself. Now I want to introduce you to a concept that separates amateurs from professionals. Probability thinking. This is the understanding that trading is a numbers game, not a prediction game. Let me explain what I mean. Most traders approach each trade as a separate event that they need to get right. They analyze the chart. They form an opinion about what will happen. They enter the trade with the expectation that their analysis will prove correct. And when the trade loses, they feel like they failed. This is the wrong framework entirely. Professional traders think differently. They understand that no one can predict what will happen on any single trade. Not with certainty. Not ever. What they can do is identify scenarios where the probability is in their favor over a series of trades. Think about a casino. A casino does not know whether the next spin of the roulette wheel will be red or black. They do not need to know, because they know that over thousands of spins, the probabilities will work in their favor. They have an edge, and they apply that edge consistently without worrying about any single spin. This is how you must think about trading. Your edge is not about being right on this trade. Your edge is about having a statistical advantage that plays out over many trades. So when you lose, it means nothing about you. It means nothing about your system. It is simply part of the distribution of outcomes. Some trades will win. Some trades will lose. You do not know which is which ahead of time. And you do not need to know. All you need to do is execute your edge consistently and let the probabilities work. But here is the challenge. Your brain resists this. Your brain wants to know what will happen now. Your brain wants control now. And when you try to force control, you break the statistical edge. You skip trades because you are afraid. You overtrade because you are confident. You change your risk because you are emotional. And suddenly, you are no longer executing your edge. You are gambling based on how you feel. This is the difference. Amateurs trade their emotions. Professionals trade their edge. And the edge only works when you apply it consistently, without interference from fear or greed. Let me ask you a question. How do you feel when you lose money? If your answer is anything other than neutral, you have work to do. I am not saying you should not care about your results. I am saying you should not attach emotional meaning to any single trade. Because the moment you do, you lose your objectivity. The moment you care too much about this trade, you start making decisions based on hope or fear. And those decisions will cost you. Emotional neutrality means you can take a loss and feel nothing. Not because you do not care about your account, but because you understand that this loss is just part of the process. It is just one data point in a series of many. It has no meaning beyond that. Emotional neutrality means you can take a big win and feel nothing. Not because you are not happy, but because you do not let that win inflate your ego or make you careless. It is just one data point in a series of many. It has no meaning beyond that. This is the state of mind that allows you to execute flawlessly. When you are emotionally neutral, you do not hesitate. You do not second guess. You do not hope or fear. You simply execute what your system tells you to do. And you trust that over time, the probabilities will reward you. How do you develop emotional neutrality? By changing your beliefs about what trading is. Most traders believe trading is about predicting the market, about being right, about outsmarting other traders. This belief creates emotional attachment. Because if trading is about being right, then losing means you are wrong. And being wrong feels like failure. But if you change your belief, everything changes. If you believe that trading is about executing a process, then losing is just part of the process. If you believe that trading is about probabilities, then losing is just a normal outcome that must occur for the system to work. If you believe that trading is about consistency, then each trade is just one repetition in a long series of repetitions. Do you see the difference? Your beliefs shape your emotional experience, and your emotional experience determines your behavior. Change your beliefs, and you change everything. Let me go deeper into this. Your beliefs about the market determine what you see in the market. If you believe the market is out to get you, you will see traps everywhere. If you believe the market is random and chaotic, you will see confusion everywhere. If you believe the market is a probability environment that offers opportunities, you will see those opportunities. Your brain filters reality through your beliefs. It shows you what you expect to see, and it hides what contradicts your expectations. This is why two traders can look at the same chart and see completely different things. One sees a buying opportunity. The other sees a trap. Neither is objectively right or wrong. They are simply perceiving the market through different belief systems. So the question is not what is the market doing? The question is what do you believe about the market? And how is that belief shaping what you perceive? Most traders never ask this question. They assume their perception is reality. They assume that what they see is what is there. But it is not. What you see is a filtered version of reality, shaped by your beliefs, your past experiences, your fears, and your desires. And until you understand this, you will continue to trade your internal state, not the external market. Here is a practical example. You have a losing streak. 5 trades in a row have lost. Now your next setup appears. Your system says take the trade. But what do you believe in this moment? If you believe that losing streaks mean your system is broken, you will skip the trade. If you believe that the market is punishing you, you will skip the trade. If you believe that bad luck comes in waves, you will skip the trade. But if you believe that each trade is independent and that losing streaks are a normal part of probability, you will take the trade without hesitation. Same setup, same market, different beliefs, different actions, different results. Your beliefs are everything. And the only way to trade consistently is to align your beliefs with the reality of how markets work. Markets are probabilistic. Markets are uncertain. Markets owe you nothing. And every trade is simply an opportunity to execute your edge. When you truly believe this, trading becomes simple. Not easy, but simple. Let me paint you 2 pictures. The amateur trader wakes up and checks the market. He feels anxious. He hopes today will be a good day. He looks at his charts and tries to predict what will happen. He enters a trade based on what he thinks will happen. As the trade moves against him, he feels fear. He starts to question his analysis. He checks other indicators, looking for confirmation that he is right. He moves his stop loss because he believes the market is just testing him. The loss grows. Finally, he exits in pain, angry at the market, angry at himself. He tells himself he will never make that mistake again. But the next day, he does the exact same thing. Because he is trading his emotions, not his edge. Now the professional. The professional trader wakes up and follows his routine. He reviews his plan. He checks for setups that meet his criteria. He feels nothing about whether a setup appears or not. If a setup appears, he enters according to his rules. He sets his stop loss and his target. And then he detaches. He does not watch the trade tick by tick. He does not hope. He does not fear. He understands that this trade will either hit his target or his stop. He does not know which. He does not need to know which. If the trade hits his stop, he exits without emotion. He records the loss in his journal. He moves on to the next opportunity. If the trade hits his target, he exits without emotion. He records the win in his journal. He moves on to the next opportunity. At the end of the week, he reviews his statistics. He sees that he executed his plan with consistency. He sees that his edge is playing out over the series of trades. He feels satisfied, not because he won or lost, but because he did what he was supposed to do. This is the difference. The amateur is reactive. The professional is systematic. The amateur needs to be right. The professional needs to be consistent. The amateur fears loss. The professional accepts loss as part of the process. The amateur tries to control the market. The professional controls only himself. And over time, the professional wins. Not because he is smarter, not because he has better indicators, but because he has mastered his own psychology. So how do you get from where you are now to where you need to be? How do you develop the beliefs and the mental state that allow you to trade consistently? First, you must accept responsibility for everything that happens in your trading. Not the market, not your broker, not bad luck. You. Every decision you make is your responsibility. Every time you hesitate, that is your choice. Every time you move your stop, that is your choice. Every time you overtrade or skip a trade, that is your choice. When you accept this, you gain power. Because if you are responsible, then you can change. If the market is responsible, you are helpless. Second, you must define your edge. What is your statistical advantage? What conditions, when present, give you a higher probability of success? You must know this clearly. And you must know that this edge only works over a series of trades, not on any individual trade. Third, you must create rules that allow you to execute your edge consistently. Entry rules, exit rules, risk management rules, position sizing rules. These rules are not suggestions. They are the framework that protects you from your own psychology. Fourth, you must commit to following your rules without exception. This is where most traders fail. They have rules, but they do not follow them. Because in the moment, their emotions override their logic. You must understand that the only way your edge works is if you execute it exactly as designed. Every time, without deviation. Fifth, you must develop the belief that you do not need to know what will happen next. This is the hardest part, because your brain desperately wants to know. But you must train yourself to be comfortable with uncertainty, to trust your edge even when you do not know the outcome. This comes from experience, from taking enough trades to see that the probabilities do work, from losing and seeing that it does not destroy you, from winning and seeing that it does not make you invincible. Over time, you build trust. Trust in your system, trust in yourself, and trust that you do not need to control the market to be profitable. Here is something I want you to understand. The market is a mirror. It reflects back to you your beliefs, your fears, your discipline, and your self-control. If you are afraid, the market will punish you for your fear. If you are greedy, the market will punish you for your greed. If you lack discipline, the market will punish you for your inconsistency. But if you are calm, patient, and disciplined, the market will reward you. Not every day, not on every trade, but over time. The market does not care about you, but it responds to how you interact with it. And the only way to interact with it successfully is to master yourself first. This is not motivational talk. This is reality. You can have the best system in the world, but if you cannot execute it because of fear, it is worthless. You can have a simple system, but if you execute it with discipline and emotional neutrality, you will be profitable. The difference is not in the system. The difference is in you. I want to leave you with this. You have a choice. You can continue to trade the way most traders trade, hoping for certainty, fearing loss, chasing wins, blaming the market when things go wrong, and you will get the results most traders get: frustration, inconsistency, and failure. Or you can choose a different path. You can choose to see trading for what it really is. A probability game that requires emotional neutrality, disciplined execution, and the acceptance of uncertainty. You can choose to master your own psychology instead of trying to master the market. You can choose to build beliefs that serve you instead of beliefs that sabotage you. You can choose to trade your edge, not your emotions. This path is not easy. It requires you to confront your fears. It requires you to change deeply held beliefs about yourself and about trading. It requires you to take responsibility for every outcome. But this path leads to consistency. This path leads to profitability. This path leads to freedom. Because when you are no longer controlled by fear or greed, you are free to execute flawlessly. When you no longer need to be right, you are free to follow your system. When you no longer fear loss, you are free to take every trade your edge presents. And when you do this, over and over, the probabilities take care of the rest. The market will give you what you deserve, not what you hope for, not what you wish for, but what you deserve based on your behavior, your discipline, and your consistency. So the question is not whether you can be a successful trader. The question is whether you are willing to do the internal work required to become one. Are you willing to change your beliefs? Are you willing to accept uncertainty? Are you willing to detach from outcomes? Are you willing to trust probability over prediction? If you are, then everything is possible. If you are not, then no strategy will save you. The choice is yours. The market is waiting, not to punish you, not to reward you, but to reflect back to you exactly who you are in this moment. And when you master yourself, you master your edge. And when you master your edge, you master trading. Thank you for listening. Now go do the work.